slow down a little bit. Even though we consolidated largely for the better part of yesterday's trading session, then you had that last hour profit taking coming in expiry week and an extended one at that, and we did tumble a little bit. But having said that, we've still managed to cling on to that 22,100 print, so it's not like a deep damage coming in any case. But yes, the Nifty mid-cap index did snap its two-session gaining streak. The Nifty bank did slip below the 50 DMA. Realty, however, also PSU banks, they continued to put on a good show. Having said that, yesterday it was L&T doing the magic all alone. That contributed to near about 22 points on the Nifty move, but a lot of dragging points, a lot of metal names, a lot of big boy private banking names, and of course Asian Paints, which was the sour point. So in a bit of a quiet range bound move now for the market.
You know, I'll say exactly the same thing what I said yesterday, which is that this market for the moment is simply consolidating with a very narrow range. Both the ends of the range, upside range and the lower part of the range, I think is very well defined. There is no large excitement on the upside. Similarly, there is no like scary fear that we are going to be seeing a breakdown. Typically, this is called as consolidation, and I'm glad markets are consolidating. When it comes to individual stocks, well, that's a function of news and liquidity, where you got flare up and flare down. So it's a market which is easy to predict. It's a market which is easy to call. It's a market which is not making anybody nervous. It's a market which is not exciting anybody also. And frankly, that is a great outcome, which is that excesses in the market are getting weeded out. Weak players are also feeling the heat of the market volatility, and given that the pace of the rally, which was extraordinary in the quarter gone by, I guess now bulls are taking it easy. I would say that this is good news. Why? Because the structure and the fabric of the market is still intact, which is that you want to be a buyer on bad days. However, you want to be a seller when you see a very good patch, so to speak. There are no large sectoral churns, little bit here, little bit there, some news alignment with global cues, and really that's about it. It's a market which I guess is very easy to predict, very easy to understand, but it's a market which is very hard to trade.
Yeah, unexciting, and the market is a bit difficult to trade. But just quickly to wrap up what happened globally as well overnight, it was a very subdued session there as well. The Dow Jones was down 60 points, Nasdaq also just 20 points down, so very sideways. And Asia too this morning has opened with a bit of a green tinge, at least the Nikkei and the Kospi, that is. Hang Seng is just marginally in the red, so we are tracking what happens. But overall, the GIFT Nifty is suggesting that we're likely to start maybe slightly in the red. But talking about back home, it's very stock specific, because at index level there are trades which are missing. And in terms of stock specific, one stock that has been gathering the maximum amount of mind space has been Paytm. The latest being that Vijay Shekhar Sharma, the founder, has actually resigned as the part-time non-executive chairman of the Payments Bank, the Paytm Payments Bank board. The future business will be led by the reconstituted board. The new appointees in the board include names like Srivasan Sridhar, D. Sarangi, Ashok Kumar Garg, as well as Rajni Sibbal as well. So these are the new people that will be forming part of the board. Of course, VSS has for now stepped down, and there are brokerages like Macquarie which have actually written a note on the same, and they are talking about how VSS is trying to send a message to the regulator that he is willing to give up control of the company for the survival, because that is in question right now, and he's trying to salvage some value out of it. They don't expect RBI to authorize any related party transactions between Paytm and the Payments Bank in future, but at least going forward, they're hopeful that there might be some relaxations. And the most important bit, Nikunj, will be what happens to the lending partners, because a lot of these people were sitting on the sidelines, but I guess Paytm will continue to be making headlines today as well.
See, the stock is up 30% from the February lows, but it is down a significant number from the recent high. Now, from a market messaging, what is important here is that is the promoter or is VSS trying to really salvage the situation, and salvage the situation by sending a message that he's willing to give control for Paytm Payment Bank, because Paytm Payment Bank is where, in a sense, there is going to be this whole tussle, so to speak. Tussle is not the right word, but regulatory overhang. So that is where I guess from a market point, we need clarity, so to speak. The market, I think, look, the Paytm, the sell-off has been so one-sided, and everyone in a sense just got scared, so to speak. But given the fact that they are expanding the operations with other banks, there is an attempt now done in order by the board to salvage the situation. If this whole issue of payment PBFL stance has been accepted by Reserve Bank of India, and if the wallet business runs independently as a separate entity, then obviously in the near term the problem will get sorted and it will get resolved. But that really depends on the view what the regulator in this case would take. But I still don't feel that the stock is going to go back to its glory days. It will take a lot of time, crystal clear clarity from the regulator, and then perhaps the markets will take a fresh card. Right now, market will react from, stock will move from one end to the other end. That's largely because of a function of news and whatever, update we get from the management.
Yeah, absolutely.